Today's market call is presented by CME Group, where risk meets opportunity, and FactSet, financial data and analytics powered by tomorrow. Good afternoon.
It's morning. You know where it's afternoon? Somewhere across the pond, it's afternoon.
Don't.
Now,
I've never used that. People used to use that term. I would say I'm going to London. Oh, you're going across the pond,
mate?
No,
mate.
I'm going
Did
to
they
London.
say?
I'm
Wait,
flying
did they
across
say
the Atlantic Ocean, and
did they say you're going to see Goldman's or Merrill's or
yeah,
Lehman's?
they put an S on the back of everything.
That drives you crazy.
Goldman's.
Wait, Guy, why are people here watching us? What are we doing right now at 11
a.m.? We're doing the market call. It's 11 a.m. on the East Coast. That makes it 8 a.m. on the West Coast and all hours in between.
And
Guy
4
Adami,
p.m. where? 4 p.m. where? Across
4
the pond?
p.m. somewhere in the middle of the Atlantic Ocean.
No, in London,
Yeah,
it's 4
London.
p.m.
In the United Kingdom, Wilf might be watching this right now. Wilford Frost, friend of the show.
Yeah. I worked in London, U.S. market hours in 2000, 2001.
How'd that work out?
And it worked out fine.
Oh,
what
no,
are you trying to do? You're looking at my LinkedIn and trying to figure out how,
Do you have a LinkedIn?
No, I have no socials. Zero. Zero. And it sucks when people send me LinkedIn things. I can't look at them because I'm not logged in. People send me a TikTok, can't look at it. I'm not.
I love the TikTok.
Instagram or a reel, can't look at it, not logged in. The Twitters. You can look at just the thing that comes up. So we got a lot going on.
You know what? Again, we say this seemingly every day, but there's a lot going on.
There is a lot.
I watched the interview with Treasury Secretary Bessent.
Yeah.
On the Bloomberg. And yes, I watched the Bloomberg. I'm allowed to do that. I strayed from CNBC. And there's a lot coming out of that, but all market moving type of things, which we will discuss. Now, here we are today on a day where the S&P obviously made another new all-time high. Why did it do that, Dan?
Because it's open.
Because it was open, 64.80 and change. We've given some back. Worth watching today how things play out. The VIX below 15. That's been a bit of a line in the sand, so we will continue to watch that. But again, you're looking, well, at least not you. You're looking for days that you want to sort of bookmark. And I thought we'd see something in July. I was wrong. Maybe August is going to be the month, but just sort of take a keen eye on today with Bitcoin, I believe, making a new all-time high. It feels like it's like everybody in the pool. It's like that scene. Remember that scene in Caddyshack when all the caddies jump in the pool at once? That's what it feels like today in the market.
Wasn't there a turd in the punch bowl in that scene?
No, there wasn't a turd in the punch bowl. There was a baby Ruth in the pool, but somebody thought it was a turd. So really,
they yelled duty. They yelled duty.
You got to clean the whole effing pool out and have a biohazard suit. Just get in there, pick it up with your hand, and then take it out. Throw it in the freaking garbage. That's what I do. Not in the pool, but when my dog shit on the lawn and stuff.
Speaking of that, my wife in 2018, we went and saw the Dead & Co.
I love the Dead & Co.
At Shea Stadium, as you would call it. Okay. And this was in June. I actually bumped into Peter Bookvar and his son at that show. And my wife, when we're leaving, she's like, oh shit, I lost my phone. She's like, I lost my phone. She finally admitted that it fell into like the toilet or something. And while she was in the toilet, and she finally admitted it 7 years later. She's like, well, I have insurance on my iPhone. I'm definitely not. It's not coming out. I'm not. There's no hand going in the toilet or something like that. Is that amazing? She just kind of slid that one in there.
No, look. I mean,
after all those years,
it's funny, and I'm sorry, everybody. I am sorry about
this. We can't do this on the Fast Money. We can do it on our podcast.
People, it happens apparently more often than people think, because I guess when they're sitting on said toilet.
Well, she wasn't doing that. It's just like it must have been because the ladies and we don't have many ladies watching here, so we can just say this. The public,
we don't know that.
Oh, they're just squatting. They're not like sitting on a toilet or anything.
They don't sit.
So, and a lot of ladies don't have pockets, right? So maybe it's like under their arm or something like that. That's my guess. I've
never see like you go to the Yankee Stadium Square Garden or go to one of Bill's
The
shows,
world's most famous
and
arena.
you walk into the men's room and the
Ugh,
guy's taking a leak at the
uh,
urinal
it's
with the
disgusting.
phone in one hand. Like, seriously, are
Disgusting.
you that friggin' important? I mean, pay attention to what you're doing.
Yeah.
Anyway, I'm going to pay attention to what we're doing because we're tasked with the market. So let's take a look at things because today is a CME day, and as I mentioned, in the S&P, or the minis, as they say, a new all-time high, giving a little bit back. Let's see how it closes. Again, with each passing day, the standard deviations away from the 200-day moving average get larger and larger. If we were to close today below yesterday's low, and that's not out of the realm of possibility given some of the things we've seen, you potentially could have one of these engulfing patterns and then sort of carry it forward and then talk about what the low is in July. And you can effort that for me, or maybe Jacob can.
Yeah.
That July low was potentially could come into play. So today is one of those days, August 13th, that I'm watching very closely, Dan.
All right. So I like what you did there, Guy. And I want to pull up 4 names that might
Yeah.
actually help make the case that you're doing.
Okay.
Look at this one, stuck out to me like a sore thumb. Look at IBKR. IBKR. What does that come out, Guy? It's
Interactive Brokers.
okay. So let's move that over. Look at that move here. And I'm looking at what the news is today, but I don't see any news. Let's look at a 3-day chart. If you can just show us a multi-day, just like a okay, look at that. Okay, it like somebody in the chat, if you guys see any news on this, and we appreciate you people in the chat. We're going to take some questions too, so throw them in.
We're always open for questions.
Now let's put in the Robin Hood, which we are obviously
that comes out Hood.
Great partners of ours. We use the legend all the time here. Similar sort of thing, okay, from an all-time high. Then let's put in, this is the Circle, guy. This is the one that reported the other day. Now, this is different. I love what these guys did here. So their first quarter out of the gate, they report good quarter, good commentary, good guidance, had a huge gap. Let's do a 3-day here. Closed on the low, okay? After the close, they announced a big secondary. I love that. Give the people what they want. You do an IPO a month or two ago, it goes really well. It's upsized, it's oversubscribed. But look at that. This is a really kind of shady thing, though, Guy. I don't know who did the secondary, but word got out. Unless that maybe it's just like, okay, we expected a good quarter, good guidance. The stock is obviously really expensive. It's in a space that's going berserk, and maybe that's that. But the fact that it closed on the low, what a lot of investment banks, here's a little inside baseball here, if they are bidding for a secondary, basically the company will go out to a handful of banks. They're usually, in this case, banks that were participating on the IPO.
The underwriters.
The underwriters. The IPO came on, okay, so this was December 2nd. Okay, so it was longer than I thought. It came at $31, okay, and the stock was trading yesterday as high as what, $190 or something like that. And so they basically do this secondary. They'll go out to a handful of banks and have them do what they call a risk bid on that. They will bid them well below the market. But once they start doing that, the banks, then they start going out to customers that might be buyers on that. And I'm going to go to look at the top holders. And these were, okay, so it's a General Catalyst, who is a VC holder. Then it's Fidelity. It's a bunch of others there. And they'll say, basically, where would you bid for, right? Which helps the bank make a risk bid. So that thing was going on all day yesterday. The banks, basically leaked it out. The customers probably start shorting the stock. Then they give them the bid.
Well, that's the thing. Once it's sort of out there, and this is sort of market stuff. Maybe it's hopefully it's not too granular, but
no, it's good.
It's sort of bid wanted, let's say 5 million shares of whatever type of thing, or we're pricing a secondary.
Yeah.
And then you go out to people, where would you be interested in purchasing? So you put together sort of a book, is what they call it, right?
By the way, that wasn't
different levels.
This went public June 4th. I'm sorry, it wasn't December. So this is within the lockup, but this must be I don't know, maybe the company. We got to look into it. But
whatever it is, but the mechanics are what they are. So, of course, in today's world, people talk. Somebody there's a secondary, something's going to happen in Circle. So what's going to happen? The predatory people are going to try to get ahead of it, and they can either short the stock or get out of long positions. And they're all different things that happen, but that's sort of the market. Now, this has, by the way, this is not casting aspersions, by the way, a term that I love, against the company. They're doing the exact right thing, but it just goes to show you, again, some of the dislocations, I think, is what you're trying to point out in the market right now.
Yeah, and the enthusiasm. The other one, let's pull up CoreWeave for a second here. So obviously, this is a company that went public in late March. In my opinion, there was a lot of hair on this story. I think I was very clear about that. I was obviously very wrong. Let's pull up a 1 year, because you could have had all of the CoreWeave that you wanted after the IPO, because it didn't have a big pop. The deal didn't get done unless NVIDIA, which is an existing shareholder, came in on the IPO and gave a big order at the IPO price. But look at that. For 2.5 weeks, the stock went sideways, right? And then it became a meme stock. It sold off 40-some% from those highs, despite the fact that a lot of the hyperscalers, their biggest customers, were making new highs, right, every day after the April bottom and that sort of thing. And so I think like cooler heads prevailed. Losses were greater than expected. The company has been raising debt to build out the their infrastructure, their data centers, so they can actually resell the compute, obviously, to the big hyperscalers, that sort of thing. But look at this. The stock rallied into the quarter big time, probably a bit of a short squeeze or a little FOMO or whatever. They announced a quarter that looked fine. We were talking to K-Parts on it on Fast Money last night, but
that's Christina Partsinevelos.
Correct. The losses were wider than expected. But this company guy is like, they have $15 billion in debt, and they spoke to the fact that they're going to continue to actually have to raise debt. Maybe it's
all right. So I'm glad you brought that up. I think they said their backlog, and you probably have it in front of you, but I think it was like $30 billion or something, number one. But number two, a term that we used to hear back in the day, and I just want to be crystal clear. I'm not comparing this company to Enron, but one of the Enron things was accounts receivable. And that's what we're hearing a lot from companies like CoreWeave, their accounts receivable. And I think, that grew by about 346%. So accounts receivable, or exactly, I mean, they're promissory notes almost. There's no guarantees around these. So when you start building models around accounts receivable, things get a little bit dicey. And I'm not saying they're playing accounting games, but there's stock-based compensation in these things. There's all different things going on with CoreWeave right now that the market doesn't care about on the way up. They only start caring about it on the way down.
Great point that you made there. Friend of the show, friend of ours, hardest working man on Wall Street.
That's Doug Cass.
It is Doug Cass. So I wake up this morning, I get up, I start reading the news and the emails and stuff like that. 5:52 a.m. Doug, and he does this over thestreetpro.com. He has tales from NVIDIA, and he is just literally, this is epic. He's been doing this now for over a year, and it's a lot of stuff about generative AI. But another good friend of ours, Jim Chanos, who actually, was the guy who called the Enron.
By the way, before Jim Chanos was Jim Chanos on the Twitter, he was like Aphrodite or something. What was he?
It was
something like. Anyway, tells a great list.
I think Elon shut down. He's been obviously a huge critic of Tesla. He shut down his account. That's why he's now at Real Jim Chanos.
See this,
but Jim,
can we put that tweet up, the Jim Chanos tweet? Because this is very helpful.
There are very few people. We mentioned Doug, but we mentioned Jim. These guys do the work, man, and they dig in and they do it old school. And so you see what Jim's saying here, and obviously Doug highlighted it. But CoreWeave's capital employed average $19.2 billion in the second quarter.
Depreciation and amortization.
Look at you. Plus lease amortization was $637 million in the quarter, or 2.548 annualized. That's 7.5 years.
Stop right there. So this is, and we had Jim Chanos on the podcast a couple months ago, and you're amortizing. CoreWeave is amortizing over 8 years, and the point you made, and I tried to make as well, though you did it far more elegantly than I, is we should be amortizing these things over 6 months, given how quickly the technology is changing. So to do it over 8 years,
Yeah.
It just doesn't make a lot of sense. Anyway, back to you.
No, I mean, it's an accounting gimmick, and Jim and Doug and a handful of others. And we had Brett Winton on. He is the chief futurist at ARK Investment on the pod. I think it dropped on Friday. And I asked him this, like I just said, like, if let's call it 2.5 years. Okay. Let's just say 2.5 years. Jensen Huang is telling us every time he's in front of a mic, we had Hopper. Now we have Blackwell, and then we're going to have Rubin, and he keeps making the case why you need to keep upgrading the hardware and how it's going to work with their CUDA software. And so how are you amortizing this stuff over 7.5 years if the guy who makes this stuff and is selling you this stuff is telling you about this great whiz-bang technology and how much faster and better it's getting? That doesn't make any sense to me. So, I mean, here we are. This is what's going on here. It'll be interesting to see if this is the narrative. Listen, you can be amazingly bullish on NVIDIA and Microsoft and Google and Amazon and Oracle, okay? But you don't have to be bullish on this thing because CoreWeave is just the excess capacity that those have not been able to build. If there's so much demand here, you needed a fifth or sixth sort of supplier of this. And by the way, NVIDIA needs them on the edges, right? And so again, I mean, I think this is a bullshit company, but whatever. And I'll defer to Jim and Doug, and they're doing a lot of great work.
And will you give me like 2 minutes? So I want to show the audience.
Hold on, Bill. Will you just mute me for 2 minutes?
No. Don't do that because I want you to opine. Okay, so here's how my mind works. You just mentioned the Edge. Of course, I think of U2, the great guitarist of U2. You mentioned Hopper. That's obviously the sheriff in Stranger Things. By the way, great series on the Netflix that will be coming back soon. So Hopper, who is, I don't know if he's married to Winona Ryder in the series, but they obviously have a love interest. You mentioned shady in terms of some of the accounting practices. My mind says, oh, Shady Grady, if you recall from Sanford and Son.
Will you stop tapping?
And then, I'm sorry. And then you mentioned Hood. Now we have a question about Hood. I will tell you my sophomore year.
You're not going to string that all together?
Well, I'm sort of stringing it all together now.
By the way, with Shady, I thought you were going to go to the Marshall Mathers.
Slim Shady.
I thought you were going to go to
I saw him and Eminem in concert. It was unbelievable.
You did not. But by the way, you know who I saw with John Alasia, who of Derryberry and Alasia?
The Duncan brothers or the Mathers brothers or the Mumford and Sons.
I saw Eminem with John Alasia. This goes back into like 2018. All right, go ahead. I'm sorry.
No, that's right. We can put up a Google of John Alasia so people know who John Justin Alasia is. And then you mentioned Hood. By the way, we have a question about Hood that we're going to put up on the screen. But as I was saying, my sophomore year in high school, it's probably 1979-ish, if I had to guess. I was called up to the varsity squad late in the year, which is a great honor as a sophomore. And we were playing Irvington at Irvington, not Irvington, New Jersey, Irvington in Westchester County, Irvington named after the great Washington Irving, who wrote many things, not least of which was, if you recall, The Headless Horseman, right? The Legend of Sleepy Hollow. Were you with everybody with me now?
Yeah,
so I'm sitting on the bench.
Where you grew up.
That's correct. I grew up in Croton on the Hudson.
Right.
As opposed to Irvington on the Hudson. So I had my ass firmly planted on the bench, and as I was young, sophomore, as I mentioned, and one of my buddies, one of the seniors on the team, Tom Wintermeyer, was going in for what I thought was an uncontested layup, only to see a gentleman named Paul Hood come out of nowhere and pin his shit against the backboard. I had never seen that in my life. I'm looking around, I'm saying, oh my effing God. I hope I do not get in this game. Anyway, let's put up the question about Robin Hood while we have a chance. Why are you looking at Bill?
Bill, just give us a little something here, because Bill is of a different generation. Bill actually at Rutgers University used to
play.
Well, no, he used to play with the women. He used to play with them.
Now you say that in a derogatory fashion.
It's all the same to me.
Okay, I'm just saying that, like you said he played, I just said he played with the women. That's all I'm saying. And you know what? Women's basketball is amazing. I'm a huge New York Liberty
You've
fan.
been to a bunch of games.
I have with Karen Feinerman, and yeah. So
Dre, well, let's pull up this Robinhood chart, because as the question goes, this is from Eric C. It's 100%. I can't speak if it's 100% above the 200-day, but it is clearly extended. And this goes under sort of the Coinbase thing. These are great companies, but everything at some point becomes mean reverting. And although nobody seemingly cares about valuations and all those things on the way up, at a certain point, people are going to start looking at things. And I'm not saying it's going back to $57, $58-ish. But what I am saying is you got to be really careful in names like this, because once the story turns for whatever reason, maybe it's Bitcoin taking a leg lower, although at 121,000, it does not appear to be the case. Something always comes out of nowhere, and you see what we used to call line jobs to the downside in these names. So I'm glad you pointed out again how far away we are, because these things they don't last in perpetuity. These basically large levels of gaps between moving averages and current trading levels.
Yeah, and I'll just say this, and again, this is full disclosure. We are partnered with Robinhood.
Love Robinhood.
I love
nothing. Yeah.
I think that I've never seen a company in about 5 years transform their business and their perception of their business like this. I really have not. And if you and so I think, and I can't remember, maybe you and I were talking about it. It's like, okay, so let's think about who they're comparing. Schwab buys TD, right? Now they're a behemoth, right? And it's not just, these things are not just about online trading, like day traders of crypto and meme stocks and this and that, whatever. There's obviously a lot of other things going on. Robinhood is trying to become a massive bank, you know what I mean? Outside of it, like they have credit cards, they have accounts. I'm sure they're going to be doing loans, like a whole host of things. The only thing that I actually think is going to be a problem for them in 5 years is the name Robinhood. Like I'm not telling you that E-Trade was a great name. You know what I mean? Like Charles Schwab is named after Charles Schwab. TD was Toronto Demand. And you say, well, what's in a name? Well, branding is really important, right? If you are trying to go upstream and get a different sort of customer who's not a meme stock trader or an options trader or a crypto trader or whatever, like perception is important, right? But they're building something real. I don't know if whatever the market cap is and the valuation makes sense one way or another. I think what you're talking about right here, though, is when you see this sort of gain in such a short period of time, it should not be a shock, because there is something called gravity in markets. And I think that's what you're getting at.
No, and not that I'm looking to give Vlad any advice, because he doesn't need mine. But to your point about the name, maybe they morph from Robin Hood into like a Nottingham, so they broadened it out to the entire. See what I did there?
That's actually an old school sort of name for that.
Yeah, nice.
I mean, listen, this is $100 billion market cap company, and they have $10 billion in cash on the balance sheet, 12.5 in debt. They actually, revenue and earnings are growing double digits. Next year expected to be a 19% earnings growth and revenue growth of 17%, trades at 55 times that. I mean, listen, it's not a cheap stock for this space by any means. And you could say, well, if the market is going batshit crazy right now, it makes sense that this is one way how people are expressing it. Let's pull up CME Group for a second here. And I know they're a great sponsor and a great partner of ours, and we do a ton of stuff with them. We love this company. One of the things that's really interesting about this guy, and you and I have remarked about this, as the S&P has made new highs and CME was at an all-time high, go to a 5-year chart. Look what's happened to this, the perception guy, that when all things are cool with the stock market, that people are going to be trading futures. Yeah, I do not understand that. Do you understand that? Like, this stock was down 3.5% today with the S&P up 1%. Or
I will tell you, I think it's part and parcel as to what's going on in the bond. I think, again, as much as we know it's CME pretty well for a myriad of different reasons, but what I've noticed over the years, as the bond market sort of stabilizes historically, when I say historically, the last few years I've been watching it very closely, that typically is a sign the CME Group is going to sell off. When you see massive bond volatility is typically when you see CME doing its best. And again, to a certain extent, it's a VIX play as well. As the VIX sort of comes off, CME seemingly has these moves to the downside. But with all that said, I think it's proven to be short-sighted by the market participants in the longer run. And the fact that we're seeing a little bit of a sell-off here, I think that's going to prove to be the case as well, because I'm not convinced any of this volatility is going away.
All right, let's rip through some stuff here, guy, because I know we want to take
Pretty
some
cogent
questions.
answer, by the way.
It was awesome. Let's rip through
By the
some
way,
stuff
I'm
here.
sorry.
Yeah.
Before, typically on Wednesdays, I say, if it's Wednesdays, Dan,
It's Butters.
it's Butters, bitch. But Butters is on vacation, apparently, like in, I don't know where he goes, to Wisconsin or some
Michigan or Wisconsin,
Minnesota.
which you literally just made up, because I don't know if he's ever been to any of those states before. He's
Now,
told
he
us
goes to New Hampshire. I think he goes to
Well,
like Lake.
that's a little different than
That's same.
Lake Winnipesaukee is not Lake Michigan. All right,
Yes,
let's rip through this really quickly.
But John, if you're watching, enjoy your vacation.
And by the way, Amanda's doing great.
She is.
By the way, man, she's going to be back with us
Before you know it.
in September. I can't wait. We miss her. All right, let's rip through some stuff here. You just looked at the S&P E-minis, the futures. Let's look at the NASDAQ 100 E-minis here. Guy, the breakout level, this is going back to late June. Let's call it 22,345 or something like that.
Mhm.
You see the 200-day moving average. It's like 21,345 or something like that. Again, playing for a pullback. You thought that July jobs number, we had that gap lower. We had a reversal the prior day, closed on the low. We had the gap lower. Didn't last for particularly long. Your bookmark that you just mentioned here, we gapped up after closing at a new all-time high. We're at the lows. We just highlighted a couple stocks in the market that we think might indicate something for a reversal. But if you're playing for much more than 22,345, which is the breakout level, you have to have a lot of other things happen. Thoughts here in the NASDAQ?
You have to have a lot of other things happen without question. But again, you want to watch days like today pretty closely, I believe. And then if you want to get granular, because obviously we know the components of this NASDAQ pretty well, look at some of the price action we're seeing today. For example, in NVIDIA, which is now down 1.5%. I don't think it made a new all-time high today. I think it traded up to 184-ish. I think the high was 184.5 or something-ish. But with that said, I mean, these are the days you want to start to watch. Like, what is this intraday reversal? Where is it coming from? Obviously, we know NVIDIA reports earnings. I don't know if it's next week or the following week. I should know, but I don't. But the point is, you want to watch these days like today very carefully, because we pointed out these engulfing patterns many times before.
Yeah, I think as important as some of these mega cap tech stocks are, and some of the brokers that we just highlighted. Obviously, banks were an area yesterday that were just raging. So let's keep an eye on the banks too. Guy, I want to go. You mentioned the Bessent thing. Bessent, Treasury Secretary, is pushing for a 50 basis point cut. They're starting to talk about the labor market again. And I just wanted to highlight this chart, and let's go to Rosie's thing first on this. Okay. So David Rosenberg of Rosenberg Research had this in his Mornings with Dave. Fed easing will depend on the labor market for the Fed. This is not about the September 17th meeting. It's about cutting. It's about whether we get the 2 to 3 rate reductions. You were talking about this on Fast Money last night through year end that the market has been pricing in. Much of this will hinge on the other part of the dual mandate, the labor market. This is the theme. I think this is really important. This is the theme of the Jackson Hole Symposium, to be held from August 21st to August 23rd, with the title Labor Markets in Transition. So going back 1 year, Guy, the Fed cut interest rates at the September meeting, 50 basis points, followed up by 2 25 basis point cuts. They came off 1%, obviously, from that 5.5% upper bound. This is the thing. Rosie said it. Let's play Rosie on the podcast from Monday.
We can do this.
Yeah, we can do that. Let's do this.
I don't even understand why at the political level it's so important right now to cut rates. Because why, as the president, would you want to risk? How could he be so certain? How can Stephen Myron and how can Bessent and Lutnick be so convinced that there's no inflation risk from the tariffs? How can they be so sure about that? And so the Fed is definitely not sure. And it's not as if the Fed's not going to cut rates. But let me tell you, when it comes time to cut rates, given their inflation concern, the economy is going to be weakening appreciably. So if you're hoping for lower rates, be careful what you hope for.
Where have I heard that before? He's spot on as usual. I mean, there's a lot. in that 30-second clip, there's a lot to sort of glean and to interpret and decipher and talk about. But I'll say this, I mean, how can they be so certain that these tariffs are not going to have an impact? And we talked about the super core that came out, and we had a guest on Fast Money last night that talked about how the tariffs were not in these inflation numbers yet. And it's just a matter of time before they manifest themselves. And some of these things in the super core are pretty sticky. And I do think that's what Jerome Powell probably sees. And that's why he's sort of dug in the way he is. Now, it's also interesting to talk about the labor market because, on the one hand, and again, I want to be really careful here, but it was clear the president, when the BLS report came out, whenever it was, 2 Fridays ago, I lose track of time, was upset that the revisions were lower. I mean, that was clear.
Yeah.
He wasn't upset about the methodology. He was upset about the downward revisions. And I've said this and I believe it. If they had revised higher, we wouldn't be having conversations. But the point is the methodology should be what the market's concerned about. Now, if you listen to what Treasury Secretary Bessent just said, and if you pull up what he's talking about is the flaws in the methodology, which I don't disagree with. But you can't have it both ways. You can't say that those numbers were fudged, it's a political hit job, and then come back and say there's clearly deterioration in the labor market that the Fed should be acknowledging, and they should be cutting 50 basis points on the back of that. Like, those things don't add up. You're trying to have it both ways, and you can't. That's just me. I'm not disagreeing with. Listen, I do think the labor market is deteriorating. I don't think those numbers were a political hit job. I do think the Fed should be worried about it. But I also think the inflation part of this equation is still the greater risk. Anyway, there you go.
Yeah, and I guess, we talked about it on Fast Money like last night. What did I say? It was a mystery and a riddle wrapped by a enigma or some bullshit like that. But like, I could not, if the data, the CPI data was the thing that caused a rip in the S&P 500 of 1% and 1.5% in the NASDAQ because inflation is not as hot as some folks thought. Okay, that's one part of the mandate. Great. But then if they're really concerned about a weakening labor market, you know what I mean? Like, that's the big difference between last year and this year. And I just wanted to highlight these charts here. Okay, so this is the Fed funds rate versus the 10-year yield. And if you look at this chart, okay, you obviously see what happened. They were coming off that zero interest rate bound in 2016 into 17. And we know what happened in 18. When the stock market sold off, then the Fed, pivoted a little bit, but then they had to lower interest rates to zero during COVID. But look at how the 10-year really did track the Fed funds. Now let's look at over a 25-year period, Guy. Look at the spread between Fed funds and the 10-year. And I think this kind of helps make the case that you have been making over the last couple of years or so. The Fed can do whatever they want, okay, to the Fed funds, and the 2 years should track that. But the 10-year does not have to, and has not happened to, but it's done so in the last, couple years, but the last 5 years, but doesn't mean that's got to be the case going forward, which actually presents, I think, the Fed and the Treasury and in general, and possibly our economy, that whole stagflationary situation if we don't have the 10-year come in.
No, 100%. And go back. There was a clip on Fast Money last night, and the woman we had that was discussing it was more concerned how not only the 10-year was going to trade, but how the 30-year was going to trade. And she seems to think, and I agree, that those rates are going higher. And they're not going higher because we're in some growth regime. They're going higher because they're global rates before our eyes. I mean, I don't want to get, again, we can do this maybe on tomorrow's show and take a look at what's been going on in some of these European countries and obviously in Japan. But global rates have been moving meaningfully to the upside, and that obviously has impact on what's going on here. So I don't know. I still submit that the Fed should just leave status quo alone. I understand the want for them to lower. I don't think that's going to be some magic bullet that the market is looking for. And Mel's question last night, in terms of the top of the show, is the market getting the green light in terms of Fed rate cuts? And what I said to her, and I believe Doug wrote about this as well, it was this time last year where the market was pricing in 6 rate cuts in 2025, and the market was measurably lower at the time. Now we're here in August and they're pricing in 2, maybe 3. And look at where we are in terms of the appreciation in the stock market. So to say the stock market has not priced those cuts in, I think is just sort of foolish.
Right. And I want to make one last point, and then we're going to move on hit a bit in a bit. But so let's just say, yesterday the market rallied. Again, we've been rallying, I think, to some degree on this notion that we're going to be going into a rate cutting cycle. Peter Bookvar and I talked about this, that dropped in the Risk Reversal podcast this morning. So go check it out. Because of a rate cutting cycle. Okay. Well, what about this? What if Powell doesn't change his tune in Jackson Hole? If we get to, a 90% probability or 95% probability from the CME Fed funds tracker of a 25 basis point cut. And let's just say they do that. That's what market expects. He doesn't want to, kind of disrupt the apple cart or whatever. Right. But let's just say this chorus of pressure against Powell continues to increase. You have some of these folks, the new BLS guy, you have all these other things. You're going to announce a new Fed chair like 9 months before he has to go. What if Powell finally says, fuck it? Okay, guys, fuck around and find out. Have a ball. Drops the mic. I'm out. And then they get one of these chimolis to come in there, or whatever you call them. What do you call rim bob beads or something?
Rim bomb beads.
Rim bomb beads. And they literally do a 100 basis point cut. The stock market, in my opinion, would go down 5% like that, because it's like there's no credibility anywhere. We're like Banana Republic sort of stuff as it relates to monetary policy. Like, does that make some sense? I think
what would happen and I don't think you think it's going to happen. Although, listen, in today's world, anything is possible. Dollar would get smoked. Gold would rally in a meaningful way. I don't know exactly what will happen to crypto, because what I have learned, and this is just observation, crypto seems to do poorly in a NASDAQ sell-off. I think the NASDAQ would probably sell off. I also think that the longer end of the yield curve would get smoked in terms of the bond market would get sold off in a meaningful way, pushing yields higher. The yield curve would be as steep as we've probably seen in the last 5 or 6 years, which people might view on the knee jerk as bullish, but it's anything but. And, to your point, any credibility that the bond market is sort of the foundation of our bond market is exactly that credibility, I think goes away very, very quickly. So I hope that doesn't happen. But in today's world, I think, it's not out of the realm of possibility.
Yeah, and Doug's saying this, 2 rate cuts would likely lift the 10-year and long yields, which is what you've also been saying. All right, let's rip through the dollar really quickly. Rosie had this comment I thought was really interesting. U.S. dollar continues to slide. The Dixie dollar index has reversed course, sliding 30 basis points to 97.8. It's now back at a 50-day moving average. Okay, let's just kind of flash forward for a second here, and let's just look at the kind of 1-year chart here. It broke that downtrend, which was obviously from
which Carter thought would, if you remember, just a little, not revisionist history, just going back. It was around that time of the trend line break that Carter thought that, and you did as well, by the way, you could see this sort of bear market bounce or counter trend rally in the dollar, and you did. And it got to actually the levels that you thought it would get to. And what I thought would happen, and again, we talked about this, is the rally would be somewhat short-lived and it would continue its decline at some point. So all these things are starting to play out.
Yeah. And, when you say, well, the dollar, there's so many other moving parts, and we just kind of, went through a few of them, but a lot of FX traders really lean into technicals, right? And we know that. So, let's just say that failure at that $100 level, that was resistance. And you could see that even when it broke it to the upside back in early May, look where it failed, right at that downtrend. So if you're looking at a mid 90s sort of US dollar, at least in Dixie terms, that will have big implications, in my opinion. Yeah, it's good for U.S. multinationals, but what the hell else is going on? And let's just look at this guy. This is going back 10 years in the Dixie. And what's interesting to me about this chart, this is not a log chart. It would look a little different, but it's going to tell the same story, is look where we are in the Dixie right here at 98-ish or something like that. It's the exact midpoint of this 10-year range, and it's also the exact average of the 10-year range, which doesn't have to be the case. The average and the midpoint don't have to line up. So you could probably try to draw as many big conclusions about where the dollar is relative to where it was 6 months ago, relative to where it was 3 years ago, but it might not mean the thing that you think it means either.
That's
Like,
right.
I just want to put that out there.
No, I think that's right. What does it mean this time? And historically, a weaker dollar has been tailwind for the U.S. equity market. I don't know if history is going to have any bearing on what's going on right now, because I think they're different. I believe they're different forces at work. I think you believe that as well. This question is sort of speaks to things that you talk about. This from Carter Evans. Do you think there'll be an Do you think there will be an M&A wave in the enterprise software industry? Adobe. Now, DocuSign's been thrown around forever in terms of that. I'm not convinced that's going to happen, because AI is so disruptive that any thought about M&A in today's world that might have made sense 2 years ago might not make as much sense now.
Yeah, we talked about it on Fast last night too. We were talking about, or 2 nights ago, I think we had Brent Thill on from Jefferies. And, if you're a software analyst, an enterprise software analyst, and this is not an indictment of the sell side, but Carter says this all the time. Your job is to sell the stories, sell the stocks. We also know that 90% of the time, sell side analysts have buy ratings on their stocks. One of the reasons that they want investment banking business. You just asked about consolidation. Well, if you're Morgan Stanley and you have a great software banker, and you will kind of take that a step further, you want to have great equity research coverage. They can't be working together, but it's this kind of unsaid rule. If Morgan Stanley has sells on all their enterprise stock, they're not likely to get IPO business in the space, and they're not likely to get M&A. And so my only point is that all these guys are going to talk their book. They're going to kind of continue to kind of tell you why AI is not going to disrupt nearly as much or quickly as you think. The stocks are saying something different. Might you see some M&A or some consolidation in the space where they try to figure out, okay, if AI really is disrupting us, we got to figure out how to cut costs, how to grow revenues, all that sort of stuff. So M&A would make sense. But guy, there's that old saying in markets, you take one big piece of shit and you put it together with another big piece of shit, you just get a mountain of shit. You know what I mean? Like, that's what you can get. You've never heard that expression?
Wow. Well, two negatives.
By the way, you talk about
but
Richard Dreyfuss in ET all the time. That's what he was building there, right? And he looked
he was building a mountain, and then Drew Barrymore came in after she had the bike ride.
Bill has no idea what are we talking about, Bill?
I thought you were going to say you get the market call.
You know what? One piece of shit, two pieces of shit, one big piece of shit.
That's why Bill's a funny guy.
Yeah, Bill, you do that too much, and we don't have a podcast anymore, and you're going to be literally doing stand up all day and night. Okay. And then let's see how funny you are there.
You know how I feel about Bill.
Yeah. So it is interesting, guy, that notion that these stocks have gotten hit so hard in the last few, and there was some disastrous sort of results in the space. We talked about Monday. We talked about some of these other ones. You could have pull Zoom up for a second, comes out ZM. And this is a cheap stock, and it's still a very profitable company. It's a one-trick pony. They're trying to add a whole host of, generative AI tools to their it won't matter. It's still going to be the same product. You know what I mean? Maybe it's a little more efficient. This has a $21.5 billion market cap with nearly $8 billion in cash and no debt. So this might be something that, would make sense from an M&A standpoint. You're basically buying the cash. You have the product. You cross-sell it if you're a DocuSign or, something like that. I could see private equity like massively just smushing a bunch of this stuff together, and that would make sense. I mean, DocuSign is a one-trick pony. Zoom is a one-trick pony. I'm not sure why they should exist. If I'm Cisco, I'm looking to maybe buy one of these things and creating a better experience on the WebEx side or whatever, but that's another story for another time, guy.
In mathematics, two negatives make a positive. In the world of M&A, two shitty companies together, to Dan's point, just makes one larger shitty company, if I may. We have a question, we have a comment, but a question from Gary Webb. Chinese equities seemingly are showing signs of life. Yes, they are. We have discussed, as you know, Dan, Alibaba is the B in my tube. I think it's trading about 125 and change right now. which has had this little stealth rally from 105. And the FXI, if you want to play that game, is starting to move. You talked about the K-Web a while ago, and that's been getting off the mat as well. So, yeah, there's definitely things going on here that you want to pay attention to. And this one, you draw that line right across those tops in the FXI, and you see, I mean, we're really close. This has been resistance level. I think we're going through.
All right, let's go back to the K-Web for a second. We bought a call spread on this thing in the Legend a couple weeks ago. Okay, it looks like a big consolidation. Holding that 200-day. Give me a 5-year. Guy, this thing looks like it wants to what?
Well, party.
I mean, look at this thing. If there was ever
a bearish to bullish reversal, you got to close it above 39. I think it's, what is it, 37.5 or something?
The other point I'll just make about the components of this, okay? These stocks trade at like 9 times earnings or something like that.
Yep.
So they've discounted absolute disaster. You know, Tencent is 10.5% of this thing. Baba is about 9%. PDD, Pinduoduo is about 8%. MetaOne is also e-commerce over there in China, 6.5%. JD.com, e-commerce. So this is really levered to a Chinese consumer that is being propped up and stimulated. But again, interesting price action. All right, we got to get out of here, Guy. The last thing we wanted to hit, though, is gold, and then we'll do nerd gold really quickly. So dollar weakness, you know, we did have gold above 3,500. It's pulled back a little bit. If the dollar continues to go back towards those mid-90s, where's gold?
Gold's going higher. It's sold off on, I mean, they were going to tax gold imports, and they're not going to. So those headlines had gold up, had gold down. But as I pointed out on Fast Money last night, the taxing of gold or taxing not of gold is not the reason to be long of gold. So nothing has changed in my view.
All right. Bitcoin, we continue to be impressed by the consolidation here. We do believe that it's correlated pretty heavily to the NASDAQ. Let's see that 110,000 breakout level, something that you and I have been, you know, it's not just a breakout level from earlier in the spring. It's like, you know, breakout above what
last November, December.
Yeah, a double top sort of situation. This one, last one, Ethereum, the futures here, Guy. I know what you're going to say if we get towards 5,000, but this is one where I'm totally spacing on his name. One of the co-founders of Joe Lubin was on the show Fast Money two weeks ago. He's the co-founder of Ethereum, and he told a story that was the same story he was telling in 2000 and 2020 and 2021 about the use cases for Ethereum. Well, as far as I'm concerned, about 4 months ago, those use cases were on the balls of its, you know, like, yeah. But my point is, and now it's just a meme coin. I mean, I know that sounds crazy, but that's what's going on. If you've gone from 1,700 to 4,700 in a few months, and you're approaching those prior all-time highs, what we know is total bullshit back then 4 years ago about Web3 and DeFi and all. And he's telling the same story. And I'm not coming at him. That guy is a gazillionaire. He's been with it the whole time, you know, but he's telling the same story. And when I think about Bitcoin and the bull case or the pillars of the bull case that we've been hearing about for 8 years, and for some of you guys much longer, most of those pillars have gone the way of the dodo. Most of the pillars for Bitcoin is just a reserve asset and a store of value, right? That sort of thing. In Ethereum, I'm not buying DeFi right now, and I'm not buying a whole host of the other bullshit reasons that people want. You know, Ethereum and Solana were like the platforms for NFTs that 98% of them went to zero. If that was one of the big bull cases for Ethereum 4 years ago, have at it, people.
Sorry about that. I was just muted for a second. I'm with you. I thought he was a fascinating guest. I didn't understand a word he was saying, but he made a compelling argument, like many of these people do. But to your point, it's like, if you recall, I believe in Rocky II, when Burgess Meredith was listening to the piano player play the song, and he said, remember, he said, change your tune.
Yeah.
Yeah, because you have to watch.
You know what he was doing? He was playing the Rocky theme song, which as the kids would say, was very meta. Think about it. Like that was a good inside joke, basically, because the Rocky theme song was in the movie.
Yes.
Okay. Like it was part of the soundtrack.
Meta.
But it's not like they were playing that song. You know what I mean?
Like they got a good chuckle.
So basically, they had it. By the way,
that was pretty cute.
Sly Stallone
Oh, I love.
had a cameo in a movie in the 70s, that late 70s, which was kind of an iconic movie, having nothing to do
Lords
with
of Flatbush.
Nope.
Got to help me.
Saturday Night Fever.
Really? I do not recall. I do not remember.
Walking down the street, he's got his strut on, and he bumps into some guy in his shoulder, and somebody looks back.
Why?
It's Stallone.
Wow.
Jacob, please find that clip and let's run that thing. It's pretty cool. You know, Doug was awesome on this. We were talking about Michael Douglas yesterday, and he corrected us that he was a
No, slow down, slow your roll. Who did he correct? Because I pointed out that okay.
But see, when you have somebody like me say us, and your response is, what do you got?
If it would have been a market thing, a serious thing, I would have taken full ownership of being wrong. But when you start to get into lanes of music and movies and stuff,
here I'm
gonna play this or no?
A producer.
By the way, Lords of Flatbush, a great movie. One of my favorite Stallone movies, though, is Cobra, and he walked around the entire movie with a toothpick in his mouth. So I started doing the same thing and wearing the sunglasses because I thought it was badass. But one of the lines is in that movie, "You're the disease,
and I'm the cure."
And I'm the cure.
Dude, listen. I was all in on all those movies. Here, gentlemen, a sequel. The film was directed by Sylvester Stallone. Co-produced and co-wrote the film with original Fever producer. That's Staying Alive. It was Staying Alive. This is 1983.
I was going to say, I don't remember that.
I mean, I don't think Stallone gets his due. He wrote,
I agree with you,
directed, and starred in Rocky. Rocky 2 was like basically the Godfather 2, better, like the Empire Strikes Back, better than the original. Okay, you see, are you following with me? You're following me?
I don't know. Yeah, I am. By the way, I think we have the clip of, I don't know if they can do this or not, of Stallone doing I'm the Disease. Jacob is very good at this. If we can't, we can't. I will say this: young Sly Stallone, as you said, they said no, they wanted to buy it from him for like $100,000, and he didn't have, as they say, my father used to say, a pot to piss in,
or a window to throw it out of. Nice, but he stuck to his guns. He believed in himself. That's a life lesson for you folks out there. He's a man. Again, if the kids today, like Bill doesn't know anything about him probably, but he's been in the Expendables like 8 times. All right, we got to get out of here.
Okay, it's like an hour. It's like a
Carter is with us tomorrow. Okay. In the podcast store, it was an epic week. We had Rosie on Monday. We had Liz Thomas.
No, just Liz Thomas now.
On Tuesday. Peter Bookvar is in there today. Tomorrow, you're going to have Guy and me, which is going to be epic. And then on Friday, we have a guy named Neil Dutta, Dutta.
And he wrote great songs like Cracklin' Rose and all those things. So we'll talk about his music.
So we'll have that tomorrow. So Guy bookmarked some things today. Thinks it could be a very, for the T-shirt fans out there, interesting day. We'll talk to you tomorrow.